afternoon. Today I'm at our Houston office. So the background is a little different and we are still in the process of making it beautiful for you. Today's topic is really interesting. You're probably wondering why is heavy vehicle has anything to do with home office. It has a lot to do with home office. I'll explain to you. But I also going to tell you that how you are going to qualify yourself for heavy vehicle deduction. Remember, we're in 2025. The stuff I'm talking about today is about 2025, and I want you to plan your 2025 with this in mind. All right, now let's go ahead and share screen with you for what we prepared for you today. And this is our website. Actually, this is our website. So on here, you see that we have content that we change from time to time. So today it is actually talking about this heavy vehicle and home office, why it is, one after another. Why do you not say heavy vehicle with equipment? Why are you talking about home office with heavy vehicle? You know what? It has a lot to do with each other. And also right here on our website, I want you to notice this onboarding with us. This button, it is for those busy entrepreneurs. You don't have time to come. You don't have time to call. And you're just at night, you cannot sleep. You got so much work to do. Maybe you got a letter from IRS. It just really bothers you. And you can come over here. You don't need to be our client. You can upload your information to us. Leave a message. We will get back to you. Isn't that easy? It is really designed with you in mind. Then this appointment button is definitely a button that you can use to get hold of us. So this is a button we designed for busy entrepreneur wanting to make appointment on your own, don't want to call our office, and that's what you do. And one last thing I want to mention to you is this YouTube channel. On YouTube, youtube.com, you can type community CPA, then you will be able to get into our channel. In our channel, we have over 1,200 videos. Our videos are knowledge-based. We don't, we're not a great entertainment person. I love to be fun and funny. I'm not. I have dry humor. I'm not very good with, throwing out jokes and, sometimes, and I also, whenever I have a joke and I'm always thinking about, what if IRS going after me and saying that the joke is inappropriate, then that's just trouble, right? So our website, though, are very much knowledge-based. So, you can see, you can even search for what we have. For example, if you just want to know the tax planning information from these videos, then, okay, it's such an ugly picture of me to begin with, but this gives you the planning strategies we have done over the years. I know some of those are marked as an older time. That's why you want to be sensitive of when these videos are out. And with that, you actually can get a lot of knowledge over here. And recently, I just did a 2025 tax season preview. 2025 tax season is for 2024 tax return. Because we're in 2025, right? We're doing 2024. Last minute, before you file it, do you still have ways to save taxes? That is what we were talking about. Now, let's go to our go to the PowerPoint that I prepared for you. Heavy vehicle plus home office equals to tax saving. No kidding. And before that, for the next 3 slides, we actually talk about our firm. I will just skip it because you know us. This is the 2 books I wrote so far. So I'm working on another book called the 2 p.m. So those are the things I do at my spare time. You wonder, what is the definition of your spare time? It's just the time I don't have to talk to anybody. I can just calm down, do my own writing. Writing a book is literally the meditation for me. So people do meditation with yoga, people do meditation with other things, but my best time for myself to really sort through what I think, what I am feeling, how my feeling goes. It is writing down my feelings, writing down my ideas. Therefore, those books are came out. And all of the internet content we have provided you here, it has this disclaimer just to show you that you really need to do your homework. Don't blindly believe anybody. Don't believe me and do research. Then see whether the content we give you is valid. And now, combination of heavy vehicle and home office equals to tax saving. And Crystal at our firm and drew these for us to impress you, to just kind of give you an idea. Obviously, when small business owners, you're probably not going to buy those vehicles that you see on the picture. You have SUV. Those are heavy vehicles as well. It's marked by this 6,000 pound as a threshold. Then, of course, home office equals to tax saving, and you wonder why. I know you wonder why. And I will tell you why at the last two slides, but right now, let me tell you what is heavy vehicle. So new and used heavy SUV, pickup truck, vans placed in service in 2025 are potentially eligible for the first year depreciation write-off as a heavy vehicle. Okay, so when you go buy the car, I know we are not manufacturing people, we don't understand the car, how they are heavy or not heavy. But when you buy your vehicle from your dealership, you can ask that question. Is this car qualified for gross vehicle weight rating above 6,000? Every car dealership knows. You can just simply ask. So I give you a couple of examples. On IRS website, they also give you the list of the vehicle by makers like BMW and Chevrolet, and they give you those heavy vehicle lists. So you want to make sure that if you buy a car, why not buy them under this rule, right? And then, of course, what kind of requirement the IRS has, so the purchase I did or makes sense, I can deduct. So the number one for the requirement is 50% for business use. So now you're going to question me, what do you mean by 50%? So what if I just say it is 50%? That's not good enough. You need to have proof. If you ever get audited, you need to prove that it is 50%. How to prove that? The best way to prove that is by your mileage, because you are a business owner and you go from one place to another is business miles. Is your car more than 50% of mileage is spent on business transportation? You need to proudly, easily, and not consider, don't need a second thought to say yes. So to do that, the best way is for you to have a home office. Imagine that if you have a home office coming out of your house, going to the post office, coming out of your house, goes to the client, it is all become business miles. That would make it easy to qualify for the 50%. It has to be purchased and placed in service within the tax year for which the deduction is being claimed. I had a little typo on the year, but you know what I mean, tax year. I know I'm talking about 2025, right? So you want to buy it in 2025, start driving it in 2025. So that way, when we file your 2025 tax return, we can do the deduction. The best practice is when you buy the car, you will purchase it under business name and also your personal name. So you're going to have the title under business and under your personal. You probably goes, why do I need to have it under my personal? Because when you go to insure your vehicle, normally if you buy a car for commercial use, the 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 insurance premium would be high, right? Because it is rated by all of your workers, everybody driving it, so that vehicle has higher insurance. But if you bought a business used vehicle, but you're the only driver on the vehicle, so that means that your risk of driving on the road is contained within your own driving. Having your name on it will help the insurance company to insure that vehicle under your particular driving record, right? So that's why to buy a vehicle for business claim, you want to make sure to put your business name on it and put your title on it. So 2 titles at a minimum. And the write-off will reduce your federal tax income and possibly the self-employment tax income and the state income is huge. Okay, so make sure that those are the conditions, right? 50% of business, 50% and more for business use, and you purchased in 2025, put in service in 2025, and you're gonna put business title, business name on the title as well as your personal name. All right, so now what kind of deduction you are looking at on the vehicle? Total write-off. So, many business can write off most or all of the business use portion of that heavy vehicle. So let's say you have this heavy vehicle, you bought this SUV over 6,000, and you are running a photographer business. So you're using that vehicle, putting your equipment, driving on site to different places, right? But let's say after looking at your mileage from your home office to different places, you are 90% of business use, but 10% is personal because this is your only vehicle. Let's say that is the case. That means your deduction for everything we talked about will apply to the 90%. So you still have the 90% of deduction. So the section 179 is something you want to remember. So there's 2 big deductions you can do. Section 179 and the bonus depreciation. Bonus depreciation can work together with 179. So it's not one or another, it's 1 and 2. So both of them can come in to deduct your vehicle. The 179 has a characteristic. You cannot deduct depreciation out of your vehicle to cause your business has a loss based on 179. So that means, let's say, if you bought a vehicle for $100,000 and you deduct this vehicle 100%, 179 can only deduct the $100,000 for you if you have $100,000 profit in your business. 179 comes in to level up your profit to make it 0. But 179 cannot create a loss. But bonus depreciation though, bonus depreciation can create a loss. So this slide talk about 179 to deduct the whole thing for you out of your vehicle. And then, in the kind of businesses where your vehicle is used as tools, for example, you have a taxi business or you have a transportation leg on lease kind of business, then you deduct the whole thing as a tool. But for some of those vehicles you buy over 6,000, but it is not a tool for you. It is a passenger vehicle and you're driving for business purpose. Business is over 50% of the business use, like those SUV, and you are buying. Then you have this 179 deduction limited to 31,300. So you will decide at that time when you come to deduct whether your heavy SUVs qualifies for 100% deduction as a tool or is for passenger vehicle and utilizing section 179. Of course, the bonus depreciation also come in as 40%. So if you bought a vehicle for 100,000, you can write off 40,000. So you write off 40,000, you still